in terms of how the scheme operates, then some of the questions we've been getting are how much subsidy will be received for each employee. So it's, first of all, it's based on your average net weekly pay, and we'll come back to how you calculate that in a second. The levels of the subsidy that are paid then is, it's the lesser of 70% of the annual net weekly pay, or 410 euros, where an employee's annual net weekly pay would be 586 or less. And where that employee is on average net weekly pay of between 586 and 960, it's 70% of their average net weekly pay, or 350 euros, whichever is less. And if they're on more than 960 of average net weekly pay, they won't qualify for this scheme. So how do you calculate your average net weekly pay? This is one that's come up quite a lot. First of all, you look at January, February 2020. Those are the only 2 months that are relevant for this. And what you look at then is you take your gross pay for an employee, you take off PAYE, you take off USC, and you take off employee PRSI, and you look at the 2 months of January, February for this. And then you divide by the number of insurable weeks in January, February. So if you have an employee who started in, say, third week of January, you'd be looking at dividing the total pay for January, February by a lesser number of weeks than someone who's there for the whole period. And that number of weeks that you can use is capped at 9 as well. You can't use a figure above 9 for that. You also, one other point here in terms of how you arrive at your net pay. So it's gross minus PAYE minus USC minus PRSI. You can't take off anything else in arriving at that net pay. So you can't take off an employee's contribution to pension, and you can't take off any salary sacrifice amounts in arriving at that net pay. So
just a question there. So with the net pay, that it's based on this year. So if you say were salespeople and you had a sizable end of year bonus that maybe brought you above what the 76,000 euro, whatever the number is, but that kicks in towards the end of the year, does that doesn't count for this calculation?
No. So you just look at January, February. Now, if you take your salesman and they receive their bonus for, say, 2019 in January 2020, and that wouldn't normally be part of their monthly salary, that may be enough to rule them out of this scheme, because you just look at January, February. You can't adjust for kind of payments that you wouldn't ordinarily receive, and vice versa. If they normally got their bonus in December, and it can be quite sizable, say, they may still qualify because you're just looking at January, February.
Okay. Yeah. Okay. Interesting.
So one of the things that there's been a bit of confusion about is with the wage subsidy scheme, there's a transitional phase, and then there's what Revenue are calling an operational phase. So there's a bit of confusion about what the difference between those is. And basically the transitional phase, I think it's probably fair to say that Revenue have had a lot of work to do to communicate all of the details of this, get their own systems up and running, talk to payroll software providers to try and get them up and running with this. So in the transitional phase, their systems are maybe not 100% fully functional like they would like them to be. So in the transitional phase, where you're applying this to an employee, the employer will be getting 410 euros per week per employee. So that may be over and above what the employee is entitled to under the subsidy. Any excess you hold on to, and it's due back to Revenue. How they'll collect it isn't clear, but it'll probably be by reducing future payments, or else you repay it back to them. So
there's a question there, sorry Dave, but the question there, Mark, from the application of it then, it's proving fairly onerous to get the right numbers and then make the application. And
it is,
it's money coming back from Revenue. What's your experience?
What we're doing is quite confusing. So I think from payroll in April, you'll find that people are getting actually more of their net wages. So I think what we're going to do is we're going to communicate it to everybody internally here and advise them on that there could be a potential tax liability by them themselves at the end of the year. But I was kind of looking into some ways, like they might have health insurance or health payments or some deductible tax just to offset against that throughout the year. But we're communicating internally to everyone that this has happened, and we're not entirely sure what comes down the line, but there might have to be tax consequences for the employee on this.
Yeah, there's that. I think we did, but it's more the process of applying for it that has been reasonably straightforward.
Yeah, we applied for it. The thing, what we did is we were running off an old payroll software, and I think we needed to get a new add-on. I think it's the Covid-19 add-on, which takes in the credits. So once we got our payroll software updated, we uploaded that to Ross Online, and we applied for it. We've yet to get the credit for it, but we have applied for it. There's been no pushback, but I'm understanding it takes 2-3 days to get refunded on it.
And I think our experience from other clients is that revenue aren't challenging these now.
No, I don't believe so. Not really. So they're looking just to get as much cash into the actual system as quickly as possible.
Okay, all right. Sorry, Dave, I had you in mid-sentence.
No problem. So that covers the transitional phase and what will be the operational phase. I suppose the operational phase, once we get to that, revenue will be telling you each payroll period what subsidy applies to each employee. So it'll be a little bit smoother to run at that stage, hopefully. Just on what Mark and Philip were talking about there, what we've noticed with the payroll software providers is that pretty much every couple of days there's a new update on the software. They're kind of, I suppose, grappling to get up to speed with this. They're doing a pretty good job. And I expect as time rolls on, there'll be less and less manual input required in the payroll. It'll start to streamline a little bit, but at the moment it is a bit, I suppose it's all new, it's a little bit up in the air. So our next question was, can I top up salaries and by how much? So the answer here is yes, you can top up salaries, and you're expected to make best effort to top up salaries to bring it to the same net pay per payroll period that the employee would normally have. So the top up cannot be more than that. So the revenue of a formula whereby you work out the average weekly net pay, and let's say you've got a monthly payroll, you work out what your average net weekly pay is, you multiply that by 52, you divide by 12, that's what the net pay can be for a given month. That top up, it's the one thing to bear in mind with that is employees may well have a tax refund. So if they have a tax refund, you can pay it out on top of that net salary that you're after calculating. That's the same as what you're allowed to pay them. So I think, as Mark mentioned earlier, or Philip, you could have an employee who's getting paid more in April than they would normally, and that'll be because of that that additional tax refund. So how does tax apply to the subsidy? So the subsidy is subject to PAYE and USC, but not through the payroll system. It's what revenue said is that there'll be a review at the end of the year, and the liability that an employee may have will be calculated at that point. So it'll be the employee's liability, not the employer's. And it's likely that it'll be dealt with by revenue adjusting the employee's tax credits. That may be over 12 months, the subsequent 12 months, maybe over 2 years. We don't really know that yet, but it's likely it'll be by adjusted tax credits, unless they have a tax refund due for some other reason for 2020 that can be offset against it. The subsidy isn't subject to PRSI, it's just PAYE and USC. So how does tax apply to the top up? So the top up is subject to PAYE and USC through payroll. There's a special PRSI class that applies, that's J9. So that's 0% employee PRSI and 0.5% employer PRSI.
So I guess is it what we're expecting here? And again, when from the start, I said that a lot of this is evolving on a daily or an hourly basis. So, but what we're seeing at the moment, David, is that employees over April, we talk about the next 3 payrolls, April, May, and June, they might get slightly more than they usually get because of how it's been treated from a tax perspective, from a personal and income tax perspective.
Yeah.
So but be very careful to communicate that to the employees, that revenue, what they're giving with this hand, they'll take away with another in maybe 2021 and 2022. They could spread it out over a year or two, but it's important that people know that this isn't extra money, essentially.
Yeah, I think that's important, because I suppose most people, whatever you get in your pay package, you kind of view, well, that's my money, that's what I'm entitled to, and revenue taken off whatever they need to. So it's a bit unusual in that sense. I suppose there's two impacts from a tax point of view. One is that because a portion of people's salary is now being classed as non-taxable through the payroll system, the subsidy, they're maybe getting the use of some tax credits and cut-off points that they wouldn't ordinarily. And then the second point is that they'll be also taxed on the subsidy element itself. So that will all hit. Yeah, so I think it is very important that employers communicate it to employees. They need to know that there will be a liability that they'll have at the end of the year, and how it's likely to be collected by revenue.
Okay.
So I suppose we've somewhat discussed this. What if the employee is due a tax refund as a result of the operation of the subsidy? Revenue said you can pay that to the employee on top of the net salary as calculated in accordance with the average net weekly pay calculation. I have seen suggestions from ACCA in particular that an employer could run payroll on a month-one basis. So that would just take in the tax credits and cut-off point for any given month, not the cumulative, which is where the tax refund is going to come from. I'm not sure about that suggestion, to be honest, because it's not in accordance with what revenue are telling you. You'll be filing a payroll return that will have a little red flag on it where revenue are saying this agrees with what we're telling you to operate. So I think it's probably best to maybe give the tax refund to the employee, but flag it for them that it in all likelihood they'll have to pay it back to revenue in future. I suppose another thing people are asking is, will revenue be scrutinizing all of these applications coming in at the moment? The short answer is no. What they're saying is it's on a presumption of honesty. The only checks they're going to be carrying out are very cursory. They're going to check that you've registered for the scheme, that the employer was on payroll at the end of February, and that a payroll submission was submitted for them. That's as many checks as they're going to carry out at the moment. Everything else will come down the line.
Mark, you were saying that something about people with the wrong bank accounts in for this.
Oh yeah, there was there over 30,000 applicants for this wage subsidy?
39,000, yeah.
And I think 5% of them were incorrect bank accounts applied to it. So they're wondering why they weren't getting the money, because they had it to pay revenue, their bank account on their ROS system, but they didn't have it on the refund system. So it's just a small thing, practical wise, we haven't experienced that problem yet, but that was just one or two of the kind of things that I read on the literature in the last day or so, which is just interesting.
I think what you're saying, David, is people revenue are expecting, they don't have the capacity to be able to check this on a case-by-case basis. So if you apply in good faith, is a phrase I hear quite a bit, but they will have the capacity in a year or two to be able to cross-reference a couple of numbers, see people who applied, check out what their turnover is like. This is something they'll probably look into once all the dust settles, you would think.
Yeah, I would expect so. I mean, I think it's going to be such a big expenditure for the exchequer that, and so many businesses are applying for it. And also the fact that it's relatively new and there's a short period of time to get up to speed with it, that they are going to audit it in the future, I would imagine. And I would imagine they are going to find issues with it in the future. The experience has always been that anytime you bring in a completely new tax subsidy or credit or anything like that, and it's done in a relatively short time frame, the initial period you'll tend to get errors and incorrect returns. So I would be very surprised if they didn't audit it in future on a risk assessed basis. So I would imagine what they'll do is they'll come up with a way of assessing who they're going to audit. That may be based on turnover levels you submit in your corporation tax return, maybe based on VAT returns, a combination of both. But yeah, I would expect that.
And I think what you're looking at in good faith, like if you're a company that's manufacturing PPE and you apply for this, then you know, that's probably not in good faith. But
Yeah.
you don't necessarily need to be, Mark, you're not saying you don't necessarily need to be a restaurant that's gone down to zero income since.
No, you don't. You don't. This affects almost everybody, Phil. And I think if you like, everyone's wargaming their whole business at the moment. So one of the things is, what is a significant economic disruption to your business? Speaking personally in our business, we're very much outwardly, we look very much at clients all over the world. We probably do envision that there will be some issues there. So we're just wargaming our scenario. We're just applying for whatever funds or grants are available in the short term. If we don't use it, we'll happily return it, but we need to be up first in the line to see this grant, to avail of this grant as such. So basically, we're just wargaming the whole thing at the moment.
And it's important to think that it's a subsidy, so it's not money that revenue is going to be looked at. The Irish government are looking for back off the companies that apply for it. It is money that we are getting from the government.
Correct. Yeah.
Okay, and I suppose, when do we get the funds? Isn't it a few days after payroll? Is it weekly or monthly? If you have a weekly payroll, does that make a difference?
It's based on when you make your payroll submission. So what Revenue are saying is they're aiming to get it to you within 2 days of you making your payroll submission. Now, under Revenue's current system, you can make your payroll submission before pay date. So if you were paying staff last Friday of the month, you can submit that earlier in the week. What Revenue are saying is that they'll only process that payroll submission within 4 days of pay date. So I suppose the advice there would be, get your payroll submission in 4 days before payday. Hopefully get your funds into your bank account 2 days after, and you've got the funds in there to pay staff on the Friday.
Okay, so it's pretty good.
It is, yeah.
Okay, so